personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Well, good morning and good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. And as usual, we like to talk about developing your edge. And Anthony Crudele, no better person to do that. We're going to bring him on right now. How you doing, Anthony?
I'm doing great, Tom. Day 2 of the Fed meeting. Excited to talk about how to trade the markets following a Fed meeting.
Yeah, no, very interesting. What do you think of that Fed meeting? Interested to hear your take on it before we jump into the charts. What was your take on that Fed meeting?
And I'm not a macro expert, and everybody knows I don't claim to be one. And from someone who just sits back, listens to this stuff with an open mind, watch the market reactions, my takeaway was this: the Fed is doing everything it can to be dovish without being dovish, right? And the Fed is actually, I think, doing this really, really well, because the market went from expectations of 6 to even 7 rate cuts to then 3 and now 2, and the market's still at all-time highs, and everyone is pinning a lot of the rally on the potential for rate cuts. And I would say several months back, I kind of got off that because the market's expectations were changing in terms of rate cuts. So I saw when it went from 6 to 7 that the market didn't really falter much at all. And so I started to think about it, and I follow some macro people, I think, that really put this in better perspective for me. And it's not the fact that the Fed is going to be cutting rates, it's the fact that the Fed is done raising rates. And I think they continue to make that more and more clear. I think the higher for longer could be the case, but it doesn't necessarily mean higher than where we are right now. And I think that the markets look at that and say, we understand where rates are going. We think that we believe in what the Fed is saying. I think that there's obviously more of the story to unfold. Will it be a soft landing? Are there other things like that that could occur that may throw a wrench into all this? Absolutely. But I think for now, I think for index traders and, treasury traders, I think that the market is at a place where we haven't been for a while, where the Fed just may not do much of anything, and they might modestly cut. And I think that the market, we've had so much volatility from COVID until probably the end of last year, where all of a sudden we're back to all-time highs, that maybe we're just in this bull market that's just working. And, maybe everyone's just thinking too much about it. And I think that's what I got from the meeting yesterday.
Yeah, I kind of agree with that, which when I realized it, when we had that reaction at the announcement where there was nothing changed, right? And the market shot up. And to me, it was just, well, the market's waiting for news. Is there any news that's going to impede their way to this bull market? No? Good. Let's keep going, right? That certainty or that uncertainty is kind of removed, at least for another 6 or 7 weeks when we meet again. And and it just was waiting for that stoppage, right? Everybody's waiting, and then okay, let's trade as normal and let's go. I liked what you put out on Twitter, though. I wanted you to kind of say, what did you used to do in the day? What did you do on a Fed day? I love hearing that.
Well, yeah, that tweet was, what did we used to do before we traded the FOMC? We played cards or we went to long lunches. I'd go to Volare. I mean, Benny at Volare, if you listen, he would see us there for many hours. It'd be an East Bank Club morning, probably some cards, then a Volare lunch. And then by that time, we'd then be back in the pit to trade FOMC.
And by the way, for those not in the know, East Bank.
East Bank is it's just a huge gym.
Right.
A couple of my buddies and we used to go in there. I actually played basketball with Barack Obama before he was Barack Obama, obviously. the president. This was years ago, and he would be up there in the gym playing basketball. I know anybody that would play back then but saw him, he'd be up there. A lot of big time people.
That's pretty cool. Yeah. So, kind of what I've noticed with the Fed announcement, whatever that direction is, and usually it does become a directional day after that 2:30, 3 o'clock time period, there's usually follow through on the next day, right? I mean, it depends, of course, in the rate environment. We've been in a hold for 7 months, 8 months, I think now. July was the last rate hike. And it just seems that day after the Fed, it tends to follow through. Now, that's not entirely the case. I think there was one case last year where it reversed, but I don't know how many meetings have been since then, maybe 6 meetings. 5 out of the 6, we've seen an extension follow through of that trend, whatever it was.
Yeah, I tested this theory on my good friend Ira Harris. Some people out there may know who he is. He's been on my podcast a lot. He's a mentor of mine. He's probably one of the brightest minds in the industry when it comes to macro and understanding markets. And I threw this theory on him years ago. And I said to him, Ira, you know what I think about the Fed meetings? I said, I think day one is always an overreaction. Day two is a reaction to day one. And day three, we find out whether or not it was an overreaction. And, because I think very much in simple terms, Tom. I don't try to think too much about what the Fed did do, what they didn't do. I don't try to think too much into a lot of this. I look at the action in the tape and I say, what is the market telling me? Right. And I've always been cautious of the first day, because the first day is, everyone's hyped up, everyone's at their machines. You get people caught off sides. You get people that are just getting into the market. You get people that have been in the market that are pressing it. There's a lot of activity that's happening all at once. And so you're bound to get an overreaction of some sort. And a lot of times you get a 3-point move. You get the rip up higher, lower than higher, or vice versa. And, that didn't really happen yesterday. It was just really a move up that kind of stutter stepped, and then it was a move up, and then another move up in today. And so I think that also, to put in context, that the market is searching for reasons to go higher. And you have a lot of people that, even if they're bullish, aren't all in. It's not easy to do, right? It's the hardest thing, I think, for a trader or an investor is to buy into all-time highs. It's just difficult. It doesn't, because you don't know what prices have done in the past, because there are no past prices. You don't know so much about how much further through is there. You don't want to be the guy who bought the high tick. There's just so many things that go into our mind, and it takes events like this to show us what the people on the outside looking in want to do. And we have a market to where people on the outside looking in are fearful of missing it, FOMO. And that's what I think it drives this tape. I think if you really want to be bearish, you have to wait for opportunities where the market should go higher and it can't, or it falters after it goes higher. We just don't see that right now, right? I mean, I go back to saying, my thoughts were, once again, when I look at this market right now, the day 2 of the Fed meeting, look at what happened on the day 1 of it. We might just be in this bull market that's got who knows how much legs it has. Don't fade it. I just have no interest really in fading this market, because with everything that I do when I get hyper focused on my day trading and my swing trading, just says everything that you needed the bears to prove, they prove for like 30 seconds that they can maybe do it, and then they're out for the majority of the time. Why try to look to pick tops I don't see it right now. Who knows? Today could be the top, but at some point we evaluate again. But until I see different action in this market, steady as she goes.
Yeah, no, that's really good points there. We had Larry Williams on yesterday. I know you know Larry, and he was talking about breakouts, Jesse Livermore. And so, it's kind of, what you said, right? You don't want to be bearish in a bull market right now, right? You don't want to be necessarily selling into weakness, and a breakout is a great way to prove that trend, right?
Absolutely. And you think about it this way, anytime I'm fading trends, do I want to be right for 5 minutes or right for 5 months? Right. And the thing is that, and I say that just because we go back to November until now, it's been 5 months of the market really going mostly higher. And when I look at it, even from a day trader's perspective, obviously with NinjaTrader, we're on the NinjaTrader network, and we know that majority of the people out here that are watching what I'm doing and what you guys are doing are short-term intraday traders. But it's important to think that if the market is doing something on a bigger picture perspective, that has massive impacts intraday. Trying to fight against any trend, up or down, that has power and that has a lot of things working for it, it puts the day trader in a weak position. It puts you in a weak position because unless you are a veteran and who's been around, who is really patient, waiting for that exact moment to be short, and then ultimately it works and it continues to work for you, and you have, whether it's a pattern or an indication or something that you're extremely patient and disciplined to wait for to trade counter trend, majority of the people are going to be too quick or have bad timing with it, may look like they were maybe going to be right for a quick return, and it doesn't work out for them, and it squeezes them for the day and potentially even out of business. And so the importance of understanding primary trend, even for a day trader, is not to be taken lightly. And I think maybe we go to the charts, and I want to go over a few things here, because when we talk about day 2 of trading the Fed, let's look to see what is the tape telling us, right? And the first thing that I'm gonna look at here when I pull up the charts, I don't know if we have the charts pulled up here or not, but I think, yeah, we do.
We're good.
When we look here, first thing I'm going to look at is the 10-year. I put this tweet out the other day as well, Tom, and maybe we talk about this just for a second. The 10-year, I mean, that is, when you're looking at the benchmark for interest rates, you're looking at the 10-year. Really, everything kind of, revolves around it when it comes to the interest rate markets. Everyone's really looking at the 10-year, even if you're trading short-term duration, long-term duration, you're still looking at the 10-year to see what it's doing. And I know that there's always going to be this fight I have with short-term day traders, whether or not you should keep it up or look at it or not. And I think it's extremely important to look at. I mean, I've got the 10-year micro treasuries up here. I've done shows on live trading it. I'm not saying that you need to trade it. I'm saying you need to watch it, because when you watch what happens in rates, even though like I said, right now, I think it's steady as she goes, you have to keep an eye on what rates are doing, because at some point, when the Fed does start to move, or if the Fed does not move, or if there's something happens within the marketplace, you have to have that little window up there that says, hey, all of a sudden rates are important right now. And I think that helps you with what I call market awareness and understanding the bigger picture that's happening outside of your short-term strategy. Now, on a day-to-day basis, it may not matter, but I want to broaden your horizons. I want to make you develop your edge as a trader. I want to make you a better trader. And I have learned that, these ebbs and flows of what comes into play and what doesn't, it's important to be there for when it does, because the one day your strategy is just not working, and if it's because of the 10-year, because you see that there's a substantial move there, you have to keep awareness of it.
Well, and I think let's give the new traders, the new viewers, a little bit of context too. The reason why the 10-year is the one you look at. It's the most traded contract on the CME, right? It's the measure by which all other countries too, it's kind of the equal or standard interest rate measure for not just the US, right? But everything, the biggest treasury, or what we call treasury, the biggest sovereign debt vehicle for every other country is the 10-year equivalent, right?
Yeah. I mean, just look at it as it's the S&P 500 of interest rates, right? You have the indexes, you have the S&P, you have this, obviously SOFR is a huge contract as well, but that's probably a little above most people's heads. Even when my SOFR friends, they're like way different world. But yeah, look at the 10-year. And so initially I look at it and say, okay. And what I like about the micro treasuries is that it gives me the perspective of just the rates. I don't need to look at the 10-year. This is not the ZN. This is just the 10-year micro. Where is it trading? You look at it, you see that's it, right? So it's trading 4.279. You can see really rates have just gone really flat. They're not doing much. They're not really relevant in this current moment, right? And so I'll take a look at next. I'll go and I'll say, what's happening in the next market that I want to look at? And when I look at the day following a big interest rate move or a big Fed move, I'm going to go and take a look at gold, right? And gold is something we haven't talked about a ton on here lately. I think we should probably talk a little bit more about it, but look and see what gold is doing, because you want to see, following a Fed meeting, where the money starts to flow. How much do they believe in what is the future of what the Fed is doing with policy and how it's going to impact potentially markets? Gold is one of those markets where if gold is moving in one direction, I don't believe it's a hedge against your portfolio. I do own gold in my portfolio, not because I think it's a hedge. And maybe I have this argument when somebody at some point on the show would be kind of fun, but I think that gold is one of those things where you own, and it's just a hedge against central banks. And so if people are buying gold, right, or even Bitcoin, it's a hedge against central banks. So you look to see where money flows. Do they really believe in the policies and how that's going to impact the dollar? Because gold is against the dollar. Is gold going up or down against the dollar? So it's something to keep in perspective. Gold still stays relatively on its highs. But what do we see here, Tom? Here up on the daily chart, that Bollinger Band starting to get flat, right? Starting to get interesting.
Right. And what you look at here, what you see here is those, those bands really wide, opening up, but right now they are starting to contract. So maybe that move is kind of consolidation mode, right?
Yeah. You look at gold and you say, or mean reversion, right? And when you look at gold right now, watch this the coming days here. It's a 20-period 3 standard deviation Bollinger Band on gold. This Bollinger Band is pretty much flat right now, but the bottom one is coming in. You've had range expansion for the entire month of March. You have another high where the Bollinger Band is now getting flat to potentially coming back in. I look like a mouth closing. It looks like a C, almost like the C for my new logo in the background for the Crudele.
Love that logo, by the way. It's awesome.
Thanks.
Whoever designed it. Did you design that?
No, I didn't design it.
You got to take credit for that.
I don't have that part of my brain to design something like that, but I can look at charts and see a C though. And if you start to see a C in the charts on that Bollinger Band, that could be very interesting for gold. And we look at mean reversion and actually, what I'd like to do is I think, let's pull up Bitcoin. I was going to go to the euro, but I want to go to Bitcoin. And I want to go to Bitcoin because I want you guys to see this here on the daily. And this is going to be interesting as Bitcoin gets pulled up here.
It looks a lot like gold, lately. It probably has something similar. I'd imagine even more, an even bigger pullback right off the highs.
Yeah.
I'd imagine those Bollinger Bands are closing in.
While that's taking her a second here, and maybe just because I got a lot of data pulled up on here, let's see if I can go to the NASDAQ. And I want to go to the NASDAQ. Obviously, I'm going to look at the indexes because I'm an index trader, and when I look at the indexes, I look to see where are we, and this is an interesting thing right now. Actually, I'm going to delete this. I don't even think I need this right now, actually. And everyone knows that I like to leave this up here because it tells me where we're going to talk about essentially in gold with the Bollinger Bands. But when I get perspective of this market, you can see here, I don't even need to draw a trend line. You could see that the market is just slowly tight, little trend higher. Bollinger Bands are really rocky and bumpy on the top. And you're seeing some rotations back down to the trend line. But overall, you look at this NASDAQ and say, this is a grind. And as a day trader, you've got to realize that at least the NASDAQ right now has some rotations. And you've had some rotations around the 5-day. It's not a total grind just above the 5-day or the 10-day where it's just, going up like that. But it is seeing some rotations, and intraday, look what's winning the battles. Longs, nothing's changing. Bollinger Bands are outward. Expansion of volatility, expansion of range. Let's look at the S&P here as well. And we haven't really had any sort of Bollinger Band peaks to where I could even see any sort of mean reversion. And look at this little trend. I mean, think about this from a day trader perspective. Actually, this morning I did a call with some traders that I did a free mentor session with a couple of traders. Great to see you guys that were in there and participated in that last contest that we had. And I had a lot of fun talking to them. One was a NASDAQ trader, one was an S&P trader. And I talked to the S&P trader and said, now, how's it been? Well, whatever. I'm not going to share what they're doing, but ultimately we know it's been a little tough, a little tight, right? And when you look at it, I say, you got to have perspective. The S&P has had minimal rotation versus the NASDAQ. So as a day trader, and when I see that and understand that, I know that I have to be really small, and I probably have to be taking these buy signals that I don't maybe love intraday, but they're good. They force me in, but I got to be small, and I got to look for small rotations. You've got to lower your expectations and understand environment. NASDAQ's giving you some rotation. S&P really isn't. And so when you see that happening, it goes back to understanding, following the Fed. Nothing's changed. Day 2 of the Fed meeting, rotating higher. Don't try and fade it. The market does not want to go down yet. It will prove to us when it wants to. You don't need to be a macro expert. You just got to be somebody who looks at price, looks at market reactions, and when the market tells us it wants to do it, it will do it. For now, it is just a grind. And look at the Russell. The Russell has been in this boxed out area I have had, and it is now trying to really get a lift. And what did I say at the beginning time? We talked about the Fed's trying to be dovish, but it's not really being dovish, but it's trying to say it is. Also really likes this. And this, to me, folks, is where I start to see the opportunity going forward. If this Russell can start to expand here in volatility, this Bollinger Band can go up, and we can start to see the Russell open up these Bollinger Bands. I think that Russell is going to be the better day trading market going forward over all of the indexes. We'll wait to see. But I think that the Russell, with the Fed talking dovish the way that they did, we'll see what rates do. If rates just stay here or start to trickle down, the Russell will have that opportunity for the more rotation higher because they are more sensitive to interest rates. So the Russell is the market I am the most focused on day 2 following the Fed meeting.
And that's interesting. We've talked about the Russell being sensitive to interest rates because of the nature of the components of the Russell, smaller companies. And so those larger interest rates really hit their bottom line a little more. And that's just kind of a generalization. But what's interesting about that daily chart is, we saw the pop in the bands with the pop in price for the NASDAQ and the E-mini. We haven't seen it yet with the Russell. So that might be coming, right? And that might be indicative of that opportunity when that Russell decides to take off, but we haven't seen it yet. That's just, to me, as a technician, kind of stands out a little bit. Doesn't mean that volatility is still constricting and we shouldn't look at the Russell. It's kind of almost the contrary point, but I agree with you. I think the Russell will benefit in a percentage basis a little bit more when we get a little more clarity on when we're going to start when the Fed's going to start cutting rates.
No doubt. And let's look at this base that's built here. You talk about breakouts with Larry Williams. I'd be curious to see what he thinks about the Russell. Russell starts pushing higher here. Gets very interesting. And I think for day traders, once again, put it in perspective. What happens following a Fed meeting? The market, there's a tone that's being set, right? The bears are trying to figure out, why they've been wrong.
Right.
And this is nothing against the bears, because I've been bearish a few times here and there as well. You know what I mean? I just take my losses and move on when they've not worked out. But ultimately, the tape continues to show us strength. And we say over and over again, it's hard to buy into these rallies, but all of a sudden the Russell, I think, can become the cleaner looking trade where that S&P is really kind of tight wound up. And you might have this one day where it's down 50 because all of a sudden it just kind of unravels. NASDAQ, I still think the NASDAQ is really good as well for good rotations. You could trade it both ways, I still think, even an upward trend, versus like the S&P is like only long and small that I see. And the Russell, because if rates start to come back down, and if you start to see a breakout and we're in this bull market that could see expansion into the small caps, this could become a market that I think day traders should keep an eye on, because I think that there's going to potentially be some really interesting opportunities there for your day trading strategy. You watch your day trading strategy and you watch the reactions off of a strategy using S&P or NASDAQ and see if your support levels are working well. You watch the reactions, you watch the feedback from the market, and maybe you start taking a look at Russell. Of course, there's micro Russell as well, but I want to expand you outside of maybe a market that like an S&P that maybe is a little choppy right now. And you look at the Russell, and I think that as long as you have some experience in your strategy, you look to see how the market's reacting in the Russell. And I think it could be pretty interesting. I think it could be a little bit of a cleaner move higher, potentially in the Russell. And I know that we're nearly running out of time, and I want to show you guys everything that I wanted to show you something in Bitcoin. And this is interesting because I was going to put this in. I was actually going to do a whole post on Bitcoin about I wanted to get shorted in the futures around 70,000, but the move happened so fast. I go, well, let me wait and see what it does for a day. And of course, Bitcoin moved like 5,000 points. I'm like, well, so much for that one. I didn't catch the trade, but going back to gold and going back to range expansion, and then all of a sudden when you recognize where a move is going to be done, look at this Bitcoin move. Just consolidation, right? You can look at this and say this is similar to many markets that we've seen lately. Gold, I mean, even potentially what could happen, we've seen in NASDAQ, S&P, and maybe what Russell does, who knows? But and you finally have this range expansion outside of that base, and then all of a sudden it goes up and up and up, and then you have this peak in the Bollinger Band, and then you have a rotation lower. And how do you know when that market's going to rotate? And I've said this many times, when both Bollinger Bands are coming in, you're going to be a little late to the party, but look at what happened here in Bitcoin. Let's make this even wider and take a look at this. My 30% line, you draw a Bollinger Band, 30, 50, 70%. You draw a line from the bottom peak to the top peak. Once you get a daily close below that 70% line, which in the futures was just above 70,000. So I need to close below 70,059, below the 5-day, bang. You had like a 8,000 point move over the course of just a few days. And, it almost went to the 50% line, but bull markets, if they're really strong, they don't necessarily test support. And here we are. And so this is what I'm looking at potentially in gold. If this starts to get a similar look in gold, you could have a short in gold for at least a short period of time. As futures traders look at the environment, gold could become a market to look at, and, we'll see what happens.
Oh, I love it. I like your analysis on Bitcoin. Interesting reaction today to the news from yesterday, right? We have this a little bit of a bump up. Bitcoin to me is somewhat a little more tepid to what the Fed does. I think this is more about the dollar than Bitcoin anyway. But I love that chart, and I like how you box in between 30 and 70% when the market is boxed in, or coming back into the box. There's an opportunity there. I like that.
Yeah, I mean, it's something to really keep an eye on if you've been long gold. Like I'm long gold in my portfolio, and not the futures. I know it's kind of, you don't want to say that on the futures, so but I am long in them because it's the way I have to do it. Like, in my IRA, and whatever, and I've had it, I rotate in and out of it. This is a time where I rotate out of gold. I don't have Bitcoin in there, but if that were to happen, and then, you look for support and you buy it back again. I mean, this is how I manage my money as a trader. And then I'll look to potentially short gold on any sort of rotation intraday and on a swing basis, all based upon this philosophy. Because I always say market environments, you have key points like the Fed, look to see what tone it's set, what market environments stay intact, what market environments might be changing, what ranges are expanding, what ranges are contracting. Look to see what happens, because those points, they may not be the drivers, but they may be the igniters. And if they ignite a move, once again, stay within what that market environment is. If it's showing you that, and if it's about to change, which it may in gold, we'll see what happens. Then, you adapt to the changing conditions, because that's what we do as traders.
Awesome. Yeah, Anthony, that's great news. Great advice. Love it. Where can people find you?
Anthony Crudele on Twitter, anthonycrudele.com. Got a ton of stuff on there, all for free for you to check out. And I just do want to quickly mention before I go, these micro yield futures, because I get messages about this every single time. Look at these treasury, micro yield futures. I said, keep them up on your charts. They're also $1 a tick to trade. I think they're a good trading product. If you want to trade yields, you can go to cmegroup.com to learn more about them. I just feel it's a decent product for traders, and I think it's a really good product to keep up for you to understand where yields are going. And so that does it for this week. And it's stay patient, everybody. That's all I can say. Day 2 following a Fed meeting, stay patient and do your homework.
Awesome. Thanks, Anthony. And by the way, micro treasuries in yield, right? Not in price. It's a smart, I think that's one of the smartest things the CME did was make it, what we're all used to talking about, what everybody's talking about, right? Is interest rates. So good on them. But again, thanks for all the information, advice, whatever you want to call it. We'll do this again next week.
Absolutely. All right, everybody, be good.
All right. So we're going to stick around. We have a special guest. Jim Cagnita will be talking again to Blue Putnam. In the meantime, we're going to take a quick break. Thanks.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures